Well, a business that I'm a little bit more in tune to, DraftKings here. That ticker symbol, DKNG, and in tune to it because of the sports fandom here. You're seeing those shares down by about 16.5% after posting a loss of $1 per share for the quarter. And despite topping revenue estimates, the sports gambling company saw net interest expense losses grow heavily from last year. For DraftKings, this is a good time to be a sports fan in Philadelphia, but also who's looking across the number of different sports that there are more opportunities to bet on. And it's a larger question of where DraftKings may be able to move forward, even with their partnerships. ESPN and DraftKings, that was a huge conversation, at least in terms of the reports that were emerging that they may be looking for a tie-up somewhere. And that would be, I think, incrementally incredible opportunity for them to tap into, especially with the amount of broadcasting that they would have access into there.
Yeah, a little bit surprised by the market reaction. This was a pretty good quarter. User metrics look strong. They also paired their loss expectations for the year, but maybe it's just the market wanting some signal of when this company might turn profits.
Maybe so. I don't know. Like I said, a lot of them are paying attention to EBITDA numbers as well, and that's sort of not I don't know. I don't know what's going on with DraftKings either.
Well, it's such a massive cost for them to take on customers. The customer acquisition costs and the marketing expenses that accompany in DraftKings or any of the different sports books that have a mobile-first approach, they've got to spend a ton of money just to get people on the platform and then retain the 1.6 million average monthly unique paying B2C customers, as DraftKings classifies them. That was an increase of 22%, but the expenses on the other side, too, just to get new customers that continue to come in and offer them money to bet on the platform first out, that they have to put out there on the table as well.
This was what I was fumbling around trying to find. I was saying that a lot of investors are focusing on the EBITDA, on the cash flow number for these companies. And that forecast is bad. That's what I was fumbling around to say. The company says for 2023, its adjusted EBITDA loss will be $475 to $575 million. Analysts have been looking for a loss of $426 million. So even on that adjusted EBITDA basis, the company is looking for wider losses than had been forecast. So that is the problem here, that they're maybe not pushing, at least in the vague direction of profitability, as quickly as the street wants them to.
So DraftKings fumbling before football Sunday.
There you go.
Oh, there you go.
You're at the headline.
I know we got to go to break, but one other number that could be an interesting kind of consumer budget tightening indicator from DraftKings moving forward is this average revenue per user, per monthly unique payer, at least $100 in the third quarter. And that is an increase year over year, 114%. But if you continue, or if you eventually see that start to trend down, that could mean that some of the users are tightening how much they're willing to gamble and put out there in the sports betting market.
And what's the cost of acquiring that customer?
I'm betting both of you are getting yelled at right now in the Slack channel.
Yeah, we probably are.
Are we?
Right now.